After killer quarter, Palantir CEO Alex Karp calls AI industry Marxist. The consensus read is already outdated. What matters now is the second-order effect most commentary still ignores. We will map trigger, incentive shift, and downstream impact before the close. After Palantir posted a killer quarter, revenue up, margins expanding, government and enterprise wins stacking up, the CEO didn't celebrate. Instead, he called the entire AI industry Marxist. Not as a casual jab. As a deliberate critique of how the sector is built. Here's what he actually meant, and why this matters more than it first sounds. Palantir's core business is selling intelligence platforms to governments and enterprises. They integrate data. They help organizations see patterns. For years, this meant working with classified information, defense contracts, law enforcement. Recently, they've pivoted toward enterprise AI, helping companies build AI applications on their own data. Karp's critique isn't about communism. It's about the business model underlying most AI companies right now. Here's the mechanism: most AI startups, and even established players, are built on what Karp calls a Marxist framework. They take labor from one place, aggregate it, train models on it without permission or proportional payment, and then extract infinite value from it. They're capturing the surplus. Think about how large language models work. They're trained on internet text, written by millions of people. Those people never consented. They were never paid. Yet the models that emerge are worth billions. The value extraction is asymmetric. Labor input is diffuse and unpaid. Value capture is concentrated. Karp's argument is that this model is unstable. It's ethically fragile. It's legally exposed, see the New York Times lawsuit. And operationally, it's becoming impossible to scale without hitting consent and licensing walls. Now, Palantir's business model is different. They sell to enterprises and governments. Their pitch is, bring your own data, build AI on your infrastructure, retain ownership and control. That's not extraction. That's partnership. But here's where it gets interesting. Karp isn't just criticizing competitors. He's flagging a systemic problem. The AI industry has assumed that training data is infinitely available and free. That assumption is collapsing. You're already seeing it. Publishers are suing. Regulators are asking questions. Artists are organizing. The cost of training data is about to spike. And companies built on the assumption of free labor input will face margin pressure. For Palantir, this is an advantage. They're positioned as the ethical, enterprise-first, data-owning alternative. But it's also a warning. As training data becomes scarcer and more expensive, the entire AI industry will need to find new models. That's the real story. Karp's quarter proves that selective, high-margin, enterprise-focused AI is working. It's not the hyped scaling play that venture capital loves. But it's profitable, defensible, and growing. What changes next? Watch for three things. First, other enterprise software companies will adopt Palantir's positioning. They'll emphasize data control, security, and regulatory compliance over raw model capability. This is already happening with Salesforce Einstein and Microsoft Copilot, both running on enterprise data first. Second, the cost of training data will become a line item for every AI company. Licensing agreements with publishers, artists, and data providers will become standard. This raises the barrier to entry and consolidates power among companies with distribution and capital. Third, regulatory bodies will start defining what constitutes ethical AI training. This favors Palantir's model: explicit consent, clear attribution, and enterprise data ownership. It disadvantages the free-scraping approach. Karp's calling this out now, at a moment of maximum confidence in the AI space, is strategic. He's not being contrarian for engagement. He's flagging a structural risk that will define the next phase of AI investment. For investors, the implication is clear: AI companies with defensible data sources and clean licensing will outperform those betting on infinite free training material. For enterprises, the takeaway is different. If you're building AI, you want to work with platforms that preserve your data ownership and compliance posture. That's the defensible layer going forward. For the broader AI industry, Karp's critique is a wake-up call. The current model works at scale only because the cost of scale is being externalized. When that externality is internalized, through litigation, regulation, or consent, the entire capital equation changes. Palantir's just proved one alternative works. Watch to see how many others adopt it. That's where the real signal is. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next. Watch the execution timeline, second-order market effects, and policy response to gauge what happens next.